Hi, welcome to the Market Alert for Wednesday, the 2nd of December 2020. So Wednesday already, and yesterday gold, stocks and bonds yields surge as dollar purge continues. So as the dollars move lower, the silver market and gold market have reversed and moved back to the upside. So let's have a look at the stock market for yesterday. The DAX very quiet, as is the Dow as well, which we've seen already in the daily charts, and we'll see more of that in just a moment. But this is the pre-market yesterday morning. You can see that we've got the market moving lower as the futures came on stream, trading down to the DP level there. And I'm just going to fast forward because I had another problem but managed to capture it on another computer. So we had the trade down to the DP level, and there you can see that first thing the market trades down to here and the close from the previous day, and then you see the volume coming in and moving the market back to the upside there. We had a potential buy signal, the market trading up. It's got the 200 MA in the way there, as you'll see prices eventually getting there, some selling there. Thought we were going to see a reversal, but we didn't. And the market reverses off the low of the previous bar and then trades up to the scalp and then through to the 200. And when we got to this sort of level, given that there was some weakness around, I thought, well, I'll move the stop to break even, and moved it too close too soon. Should have allowed 20 points really, but we got the 200 MA there with some resistance and obviously the BRN as well. So it was too close, and my own fault, and got taken out at that level as prices came back, and then he came back briefly and then moved back to the upside, having traded below the 5-bar moving average, then closing above. And that's all it needed. It was a shakeout, and you can see how they bought back here. Something that I've noticed that they're doing this quite frequently now, where you'll get into a trade, they'll shake it out, and then they'll bring it back. And the 5-bar moving average is the key here to gauge the momentum as well. So the 5 is above the 20, and then you'll see that prices manage to get through. They don't travel a great deal of distance beyond this. It's about 25 points. And then in this bar here, you can see how narrow the range was, and the volume has increased and prices came back to close off the highs as well. So there's some selling around here, which then sort of sets at the market in a sideways move, and a few more selling bars there. But the market drifting back to that resistance to the left. So the market traded sideways. We then had the manufacturing PMI coming out. So the buy signal there is invalid, waiting for the news. And then you'll see once the news is out, we have a potential sell signal. And this is a very interesting bar. Just look at this. You've got a sell signal there and huge volume as they try to buy back the market at this level. And I thought, given this trade, that we were likely to see a quick reversal to the upside, given the amount of buying that had come in down here and how narrow this bar was. But no, it came under pressure, and market stayed below the 5-bar moving average and traded down, as you'll see here, to the target price, and then just through the 200 MA, where prices were then brought back here, which again you can see the buying coming back into the market. So then staying sideways, and then we head into the 10 a.m. cutoff, which I'll just fast forward to, and there you can see there. Now in the afternoon, prices just traded sideways. It was incredible. I'm going to fast forward through this. You can see here that they're toying with the 200 MA and off the BRN. And then, of course, we were waiting for news. This was interesting as well. The market took off all of a sudden, and I switched to the 1-minute chart. And I haven't seen this since the futures trading days in before we actually got the internet, and we used to have price charts or paper charts that we would actually update each week when they were sent in the post. And this is what I used to call a gapped up professional buying bar, where the market just jumped and we saw this happen, and it's generally a sign of weakness. And these happened at the start of a trading session. Before we had 24-hour trading, the markets had set times. So, for example, the silver market would open at 1:30, trade till 7:30 p.m. in New York. So the overnight news wasn't factored into prices like they are now. And what would happen is that the market would have this news and it would gap higher, and the market would drive, and then all of a sudden it would reverse and move in the opposite direction. They were designed as like sucker moves to pull people in. They would buy the futures contracts, and then the pit traders would then sell into this as prices moved higher, get a better fill, and prices move lower. But I've not seen that. It was just the way the time rolled over from in the minute. This is a minute chart. I would just rolled over. So go back to the 2 minute, you'll see it there. It's slightly different. So I was intrigued to see what had happened, and there you go. So, and then prices moved back to the downside there as well. I'm just trying to bring this up. So we had Powell testifying at 3. So really there was nothing else to do until he'd spoken, which was for some time. So prices there waiting, and we had a potential sell signal there as the market kept bouncing off the 200 MA. This was filled, and again you can see how prices came off the low of this, but the volume wasn't as great as it would normally expect with this type of price activity. And then I'm just going to fast forward through, because the market manages just to trade down to the scalp there, and then just became sideways. It was the most torturous trade I think I've done for a long time, just trying to grab a few points, and I ended up with 6 out of that. And then the market just traded sideways. So again, I'm going to fast forward through. I did start to drift slightly lower there, but no great shakes, just really quiet, and then the market coming back. And this is something we're having to live with again at the moment, because the market's quiet. As you can see there in the Dow, it's just sideways at the moment, as is the DAX, which I'm just going to move over to. Let's find the daily chart, and let's just shrink a few things down here so that we can see what's going on. So here you can get an idea of how quiet things are, and the volatility is dropping as well, which is an indication that we are due for a correction. The market obviously waiting to see if Trump is going to leave the White House or not. Waiting for the Supreme Court to vote, and also the Electoral College, from what I can understand of how their system works. So the market is really stuck with this sideways move at the moment, but it is due for a correction, which the implied volatility is indicating. But before we look at that, let's just have a look at the overnight and compress the chart, see where we are in the intraday picture, and we can see that we've already below the 200 MA and the DP. And let's just move over, see if we've come back to these sorts of areas. We've come back to the 200, found resistance, still finding resistance at the 200, and obviously we've not made it up to the DP yet. So if prices move lower, you've got the S1, and the low is going to be very important, as it always is. If this occurs just below the DP, of course, and above there, you'll see the high, which is where they'll be trying to aim to get this market if they can, as they'll always want the market to break out through the highs that you see in the daily chart, which for the last 2 days, or sorry, for yesterday, it failed to do so. The day before, it managed to achieve it, but it still came off the highs before the market closed. So overnight, you can see prices are quiet. We've got an inside bar for yesterday, which is this one. So the high and the low are inside of the previous day's high and low. And at the moment, we've got exactly the same overnight, with prices inside of the previous day's high and low as well. So a quick look at the implied volatility. This down slightly, 20.28, yesterday 20.31. And notice that the average line, if we look at the color-coded one, the average line is starting to get close, and a close above this we'll start to see amber in the dots, indicating that potential correction talking about. Of course, it's all dependent on if Trump concedes and any more vaccination news, anything to manipulate the market to the upside. But outside of that, that's the sort of potential weakness that we're seeing at the moment. Okay, just before we finish, let's have a look, see what news we've got today. Today is Wednesday, so we've got the ADP farm employment figures, and again we've got Powell at 3 p.m, so it could be a slow afternoon. I'm not actually here this afternoon, so might not be a bad move actually, because yesterday he was testifying and the market traded in that very narrow range. Quick look at silver, see where we are, and you can see that we came close to the 21.68.5, and then the market's traded back up to the 50 bar and the 20 bar moving average, found resistance there and is down slightly overnight, but a great recovery yesterday on the upside. This market is actually very strong. It's just been monkey hammered because of the December delivery futures, and also the banks wanted to buy it back cheaper, slam the price by selling futures contracts into the market, buy back the physical cheaper, and then the market's free to move to the upside. They know as long term as anybody else that the dollar continues to devalue, then the precious metals is the arena to be in. But so a good recovery for silver yesterday. Let's hope this continues to move to the upside and get back to those lofty levels of $30 per ounce. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.